1720. A Parisian merchant sells his house for paper notes. 6 months later, those notes bought him 3 houses. 6 months after that, they won't buy bread. 2021. A software engineer sells his car for Bitcoin. 6 months later, that Bitcoin buys him 3 cars. 6 months after that, it barely covers his rent. 300 years apart, different technology, identical psychology, same ending. What if I told you the crypto boom wasn't new? What if Bitcoin, Ethereum, and every altcoin followed a script written in 1720? What if we've been here before and nobody remembers? To understand where cryptocurrency is headed, we need to go back. Not until 2009 when Bitcoin started, not to the dot-com bubble. Further, for the first time in history, someone convinced millions of people that paper without value could make them rich. To a scheme so brilliant, it changed finance forever. To a crash so devastating, it took France a century to recover. History doesn't repeat, but it rhymes. And right now, the rhyme between 1720 and today is so perfect, it's terrifying. This isn't taught in finance classes. They teach you about stocks, bonds, and diversification. They don't teach you that the first stock market crash was caused by printed paper backed by nothing, by a Scottish gambler who convinced France he'd discovered infinite wealth, by ordinary people who believed paper notes could replace gold forever. They don't connect those dots for you. Let me connect them. The story begins with disaster. France, 1715. King Louis XIV dies, leaving the richest kingdom in Europe completely bankrupt. The treasury is empty. The government owes more than it can ever repay. Sound familiar? But this wasn't a gradual decline. This was an instant crisis. Source: Manias, Panics, and Crashes by Charles Kindleberger. Entered John Law, a Scottish economist, mathematician, and professional gambler. He'd been exiled from England for killing a man in a duel over a woman. He'd been banned from France for gambling debts. Now he was back with a proposal so radical it seemed insane. What if France didn't need gold? What if paper money could be better than gold? What if he could make France rich again with nothing but a printing press and a story? The Duke of Orleans, ruling for the child king, was desperate. He listened. He shouldn't have. Let me take you to Paris, 1716. Law establishes the Banque Générale, a private bank with a revolutionary idea. Issue paper notes backed by the bank's promise to pay. Not gold, not silver, trust. People were skeptical. Paper instead of gold? Madness. But Law was brilliant. He convinced the government to accept his notes for tax payments. Suddenly, they weren't just paper. They were useful, they were valuable, they worked. Source: The Mississippi Bubble by Émile Levasseur. Then came the genius move, the Mississippi Company. Law acquired trading rights to Louisiana French territories in America. Massive lands, unlimited potential. Gold mines, silver mines, endless resources. Or so the story went. He offered shares, not in gold, in his paper notes. Buy shares, get rich from American wealth. Simple, brilliant, irresistible. Notice what just happened. Law created value from narrative. Louisiana had potential, sure, but no gold had been found. No silver mines existed. No profitable trade was happening, just land. And a story, a very good story. Your cryptocurrency wallet right now. Bitcoin has no gold backing, no silver, no land, just a story. A story about scarcity, decentralization, and freedom. Sound familiar? Source: Bitcoin White Paper, Satoshi Nakamoto, 2008. At first, shares traded quietly. Then word spread. American riches, guaranteed profits, get in early. The price climbed, 500 livres, then 800, then 2,000. People who bought early became wealthy, very wealthy. Everyone could see it. Everyone wanted in. By 1719, Mississippi Company shares dominated Paris. Trading happened in the street. Literally, Rue Quincampoix became the world's first outdoor stock exchange. Thousands crammed into one narrow street, shouting, trading, buying, selling. The energy was electric. Fortunes were made in hours. Source: Extraordinary Popular Delusions and the Madness of Crowds by Charles Mackay, 1841. Marie Catherine Deschaze was a laundrywoman. She earned 20 livres per month, barely enough for food and rent. She heard stories. A fishmonger became rich. A coachman bought 3 houses. Servants were retiring at 30. She saved 50 lives. It took her 2 years. She bought one share in March 1719 at 2,000 livres on credit, promising to pay from profits. By August, that share was worth 10,000 livres. She paid off the debt. She bought more shares. By November, she owned shares worth 60,000 livres. 3,000 months of washing laundry earned in 8 months of holding paper. Source: The First Crash, Lessons from the South Sea Bubble by Richard Dale. Her letters to her sister. I don't understand how this works, but everyone is getting rich. The shares only go up. I'm holding on forever. Sound familiar? Every crypto forum in 2021 said the exact same thing, hodled diamond hands to the moon. But beneath the frenzy, something was breaking. Law was running out of real money. Too many people wanted to cash in paper notes for actual gold and silver. So he did what seemed logical. He printed more notes. If paper works, more paper works better. By 1720, Law had printed nearly 3 billion livres in paper notes. France's total gold and silver reserves, about 400 million livres. He'd created 7 times more paper than there was real money to back it. Source: When Money Dies by Adam Ferguson, warning sign 1, supply increasing exponentially. Bitcoin started with scarcity as its main selling point, 21 million maximum, but then came Ethereum, then Litecoin, then Dogecoin, then 10,000 other cryptocurrencies, each claiming to be the future. The total crypto market cap hit $3 trillion in November 2021. Source: CoinMarketCap historical data. How much of that was backed by actual value, by profitable businesses? By real utility? Nobody asked. The price was going up. That's all that mattered. Warning sign 2. Leverage and debt. People weren't just buying Mississippi shares with savings. They were borrowing to buy more, mortgaging houses, taking loans. Because shares always went up, risk didn't exist anymore, or so they thought. Fast forward to 2021. Crypto margin trading exploded. People borrowed to buy Bitcoin at $50,000. It's going to 100,000, they said. Maybe 500,000, maybe a million. Source: Bitcoin margin trading data. Multiple exchanges. Some took out home equity loans to buy crypto. Some maxed credit cards. Some borrowed from retirement accounts because it always went up, until it didn't. Warning sign 3. Mania replacing logic. By early 1720, Mississippi Company shares traded at 18,000 livres. The company's actual profits, nearly zero. Louisiana had produced almost nothing. No gold, no silver, just expenses. But nobody cared. The price was the story. The story was about the price. Your Shiba Inu coin, your Dogecoin, your SafeMoon. What do they do? What value do they create? Most people who bought them couldn't answer. It didn't matter. The numbers go up. That was enough. Source: 2021 meme coin market analysis. Then came February 1720. A few smart investors started cashing out, converting paper to gold, taking profits, leaving Law panicked. If too many people wanted gold, the scheme would collapse. So he made paper notes illegal to hoard, made gold illegal to own in large amounts, forced everyone to use his paper. Source: John Law, economic theorist and policymaker by Antoine Murphy. It didn't work. It never does. When you force people to hold something, they know it's worthless. March 1720, the dam broke. Everyone tried to sell at once. Shares crashed from 18,000 livres to 9,000 in days, then to 4,000, then to 2,000. People who'd been millionaires on paper became paupers in reality. Maraka Theron, the laundry woman, watched her 60,000 livres become 8,000, then 4,000. She tried to sell, couldn't find buyers. By May 1720, her shares were worth 500 livres. Less than her original investment, 3 years of savings plus 2 years of dreams, gone. Source: Historical accounts compiled in the Mississippi Bubble. Historical archive. Her final letter to her sister, June 1720. They said paper was the future. They said gold was old thinking. They were wrong. I should have kept my 50 livres in silver. At least silver bought bread. This paper buys nothing. Your crypto wallet in 2022, Bitcoin fell from 69,000 to 16,000. Ethereum from 4,800 to 900. The total crypto market cap lost $2 trillion, 70% gone. Source: CoinMarketCap 2022 data. People who bought at the top, who borrowed to invest, who believed it only goes up. They learned what Marek Theron learned 300 years earlier. When everyone tries to exit at once, there's no floor, only falling. But here's the twist that should terrify you. The pattern didn't end there. The crash destroyed France's economy. Savings vanished. Trust in paper money died for generations. Inflation exploded because all those worthless notes were still circulating. Bread prices tripled, rent doubled. The chaos set conditions for the French Revolution 70 years later. Source: The Financial History of France by Marcel Marion. One bubble, decades of consequences, generations of suffering. This pattern went global. England had the South Sea bubble. Same year, same mania, same crash, different companies. Identical psychology. Source: The South Sea Bubble by John Carswell. It means the technology changed. Human psychology didn't. Law created artificial value with paper and a story. Crypto creates artificial value with blockchain and a story. The mechanism is different. The pattern is identical. U.S. household crypto ownership peaked at 16% in 2021. That's 52 million people. Source: Federal Reserve Survey of Household Economics, 2022 average investment, $9,000. Most bought near the top, most lost money. Most learned the hard lesson. But it's not just crypto. The pattern is everywhere. Meme stocks, GameStop, AMC, Diamond Hands, apes are strong. Together, retail investors buy shares not because of value, but because of narrative. The price went from $5 to $480, then back to $20. Source: GameStop, Stock Historical Data, 2021 NFTs, digital art selling for millions. It's the future of ownership. A JPEG of a cartoon ape sold for $3.4 million in 2021. Source: Bored Ape Yacht Club sales data. SPACs, special purpose acquisition companies, blank check companies with no business. Just trust the founder. Hundreds launched in 2020 to 2021, most crashed. Investors lost billions. Source: SPAC Market Analysis, Bloomberg 2023. Every single one follows Law's playbook. Create excitement, build narrative, ignore fundamentals, soar on enthusiasm, crash on reality. The numbers hit home. If you invested $10,000 in Bitcoin at the 2021 peak, it's worth about $4,000 today. Source: Bitcoin price November 2021 versus November 2024. That's $6,000 gone. Not temporarily, actually gone, unless it recovers, which it might or might not. If you put that $10,000 in a high-yield savings account at 3%, you'd have $11,000 today. Boring, safe, profitable. But FOMO said Bitcoin to the moon. Fear of missing out will cost you $7,000. Your rent went up 25% since 2020. Your grocery bill climbed 40%. Your healthcare costs jumped 30%. But your crypto portfolio down 60%. You needed that money for real life. It's trapped in digital wallets, hoping for a recovery that might never come. Source: BLS Consumer Price Index versus crypto market returns. Student loan payments restarted in 2023, $503 average monthly payment. How many crypto investors used loan forbearance money to buy coins? How many are drowning now? Source: Federal Student Aid Payment Data. Here's what keeps me up at night. The law's bubble destroyed one country's economy. Today's bubbles are global, connected, instant. When crypto crashes, it hits everywhere simultaneously. When one exchange fails, contagion spreads to all, and we've made it easier. You can buy crypto on your phone. In seconds, with money you don't have. Credit card purchases, margin trading. Leverage up to 100 times your investment. You can lose more than you invested. You can go into debt buying digital coins. Law would be impressed and horrified. 304 years since the Mississippi bubble. The pattern has repeated in railroad stocks, radio stocks, automotive stocks, computer stocks, internet stocks, housing, and now cryptocurrency. Not because people are stupid, because the temptation is irresistible. Get rich quick. This time is different. Don't miss out, but it's never different. Technology changes. Cars replaced horses. The internet replaced mail. Blockchain replaced ... What exactly? And does it matter if the price collapses anyway? History teaches us, manias end always. Without exception, the timing varies, the trigger differs. The outcome is guaranteed. Those who get in early and get out before the crash win. Everyone else pays the price. So here's what I can't stop thinking about. Every person who bought Mississippi shares thought they were early. Maraka Theron bought when shares had already quadrupled. She thought she was smart. She was late. Most people are late. By the time you hear about it, by the time your uncle mentions it at Thanksgiving, by the time strangers talk about it in elevators, you're late. Every person who bought Bitcoin at 60,000 thought they were visionary. Mainstream adoption is just beginning, they said. They were late. The early adopters bought at $1, at $10, at $100. They're the ones who got rich. Everyone who bought at 60,000 is still underwater. Are we the generation that finally learns, or are we repeating Law's mistake for the 100th time with better technology and worse judgment? So let me ask you this. Look at your investment portfolio. Look at your crypto wallet. Are you holding value, or are you holding a story? Can you explain why it's worth what it's worth? Or do you just believe it'll go up because it went up before? Drop a comment. Tell me, did you buy crypto? Did you make money? Did you lose money? Or are you still holding, hoping, believing the next bull run will save you? I read every single one, and here's something I haven't told you yet. There's one group that profited from every single bubble, every crash, every mania. They knew something everyone else missed. One strategy that worked in 1720, in 1929, in 2000, in 2008, and today. That's for next time. If this changes how you see cryptocurrency, hit subscribe. More patterns, more history, more truth. Because the best way to avoid the next crash is to understand the last 300 years of crashes, and they all look the same. Thank you for watching this through. The Mississippi bubble wasn't unique. It was the blueprint. The question is whether we'll keep following it forever. I'll see you in the next one.